China has really moved to use its capital markets to fund and support innovation and especially the technology sectors.
Without innovation, China cannot move up the value chain.
China is a tremendous tariff maker.
We call Donald Trump 川建国, so Donald Trump helps to build the new China. China was forced to innovate.
China has been guiding the capital market to the place where the country needs the most development.
科技产业应该是前所未有的，从上到下，全民通过资本市场来支持这个科技产业的这个引领。
While the so-called tech revival has been the driver, they are on a mission to make China's stock market great again. For the longest time, China's stock market carried the label uninvestable, and its Asia market, which is mainly for domestic investors, they are often likened to casino. So it's not seen as a place for rational investing for retail investors. They were often jokingly called 韭菜 or chives, as they get harvested time and times again. There were no match for big market sharks or big investors. Wild price swing as well as occasional scandal, they only cemented that reputation.
China will replace the head of its securities regulator after months of market turmoil. Liu Shiyu, the current head of the Agricultural Bank of China, will be the new man at the helm, and he replaces Xiao Gang, who has been dismissed. Now, he was in charge during last year's market crash.
Surprise move by Chinese authorities. They have replaced the head of the country's securities regulator amid a continued battering of the stock markets. A banking veteran Wu Qing will replace Yi Huiman as chairman and party chief.
A former head of China's securities regulator is under investigation over suspected disciplinary violations. Yi Huiman is the second regulator of China's $12 trillion stock market to be investigated for graft in the past decade.
So the case of Yi Huiman was really interesting and captured people's attention because it was so abrupt. Yi Huiman is a veteran. He was helming the CSRC for 5 years. And then early last year, we heard that he was being removed from his post. At the time, there were no real reasons given. His ouster came at a point in time when China was trying to reform its capital markets. Shortly after Yi Huiman's removal, his successor Wu Qing came on board, and then the State Council then also introduced new guidelines, basically giving it greater oversight over China's stock markets. This also, as we've seen now on hindsight, how China has really moved to use its capital markets to fund and support innovation and especially the technology sectors, which are increasingly becoming a very important part of its economic growth.
Mr. Wu earned the reputation as the broker butcher when he led a crackdown on traders in the mid-2000s.
Wu Qing has taken over the role for a year, actually a year now, right? So he's done a tremendous job to clean up the mess. For example, he's doing more small investors protection. He's putting many of the companies who has been trading illegally or has committed stock market crimes, they make them held responsible. Because of that, right? So the confidence in the market is slowly coming back.
以两创板的改革为抓手，但同时推进完善发行上市、并购重组等一些制度改革安排，更大力度的支持创新，更好的支持不同行业、不同类型、不同阶段的优质企业，通过资本市场来茁壮的成长。
现任的吴清主席之前的多任证监会的主席，大多数都是中国人民银行或者说是大型的商业银行的副部级的干部转任到证监会主席，而反而没有证券市场从业的这个人能够直接的晋升到这个证监会主席的任上。只有吴清主席，他原来曾经是上交所和深交所都工作过。 但是他也不是从上交所直接转任到证监会，而是先过渡到了上海当副市长，然后作为一个副部级的领导干部，然后转任到证监会。所以就可以看得出来，证监会这个很尴尬的这样的一个监管部门，就是历史最长，然后最受市场的关注，就是整个的在这个监管体系当中的话，它始终是处于一个最后的一个位置，它反而不如这个银保监会啊，甚至是国家金融监管总局这样后成立的新的这种单位。
So the CSRC, as the securities regulator, sometimes has competing priorities and has to do this tough balancing act, according to many analysts. On the one hand, it extends its reach because it's concerned that investors may be overextending or taking too much risk, because that has implications, right? If there are huge losses, that could have an impact on people's happiness, their wealth, and in extreme cases could lead to perhaps concerns over social unrest. On the other hand, though, there have also been criticisms of the regulator that its hand might be a bit too heavy in what is supposed to be a free-flowing capital market. For example, when it comes to greenlighting IPOs, the criticism sometimes has been that only companies that are in favored sectors are allowed to list. And therefore, it shows how heavy-handed the authorities are in terms of guiding where they want the money to go.
In the past 10 years, we didn't see much IPO of property companies in China. The government says you're having too much funds, you're hurting the economy, so I'm not giving you the money. And you have to develop the technologies and medical research, so it's throw money to that sector.
Capital market is one of the instruments that the authority can use to re-engineer, to restructure the Chinese economy. Even if you don't have earnings, you can still get listed in a new tech board, which is in Beijing, that is catering towards smaller, fast-growing but profitless companies. The index of the new tech board actually is done tremendously well year today. There's a tremendous movement that is going on in that part of the market.
And what really stood out was a comment from CSRC Chairman Wu Qing. He actually pointed out that in recent years, over 90% of newly approved IPOs are those tech companies. And if you look at their market cap, so those tech companies accounted for more than a quarter of the A-share market. That's more than sectors such as banking, broker, as well as property developers combined. So the message is pretty clear. China's stock market nowadays are not built on mortars and bricks anymore. It's running on chips and code.
So we have to go back to the 1980s, and that was the time of China's reform and opening up. As Chinese companies were trying to develop and grow, what they needed was cash. And the Chinese authorities tried to experiment with different market ideas at this point in time, and that was what led to the formation of the very first stock trading counter. Shanghai Felo Acoustics was the very first company to publicly sell shares back in 1984, and that marked the first time that this had ever happened since the Communist Party of China came into power in 1949.
So there's a classic story from 1986 that people in China's financial circles still love to tell. So during a meeting in Beijing, Deng Xiaoping handed over the stock certificate of Shanghai Felo to John Phelan, who was at that time the head of New York Stock Exchange. That's a way of saying China is getting back into the capital market. And just 5 years later, in 1991, we're seeing both Shanghai and Shenzhen stock exchanges officially opened for business. So that is really a symbolic gesture, saying that China is fully getting back into the stock market.
In the early days, the government did figure that the stock market could be one of the ways that they could channel people's savings into the state-owned companies, which, as they were hoping, would be able to grow but needed cash and investment. It was also a way to ensure that the investment risk was spread and not solely concentrated among the state banks.
We didn't really have the first securities law until the year of 2000. It's only 25 years ago we had the first securities law. But now if you look at China's stock market, we got about 300 to 400 securities laws and legislations and everything. So it's actually a very significant growth. Don't even mention other sides like the number of listed companies, mutual funds, the hedge funds, the growth of professional investors. So all these things, I mean, it's actually building the stock market from nothing at all back less than 4 decades ago to one of the world's largest stock markets.
Traditionally, China's economy has relied on banks, not stock market, and that credit pipeline is still pretty much controlled from the top. For example, if you are a state-owned enterprises, normally you won't bumping into issues like funding shortages, as the door is widely open for you. But unfortunately, if you are one of those small and medium-sized enterprises or private companies, you're always left waiting in the corridor. And for sure, China's private sectors have flourished since the reform and opening up, but its operating environment has always been policy dependent. For example, if the wind is blowing in its favor, private companies boom. But if it's shifting back towards state champions, they are the ones who get hugs while private companies get squeezed.
There's a term commonly used in China that is 国进民退, and that literally translates to the state sector advancing while the private sector retreats. So one might think of Jack Ma of Alibaba, arguably China's most famous billionaire. Really, at one point, he was the media darling in the spotlight and hailed as an example of a successful Chinese entrepreneur and a huge business.
You know, past 20 years, we make people like a machine. Now, we make a machine like a people. So, we have to change the way of education.
But then we saw back in 2020 as he made some rather critical comments of China's financial system, and then he disappeared from the spotlight for quite a few years.
It wasn't a smooth sailing for both Alibaba and Ant Group, which is the fintech empire that Jack Ma once helmed. And Ant Group's blockbuster IPO was abruptly halted in 2020. And in the following year, Alibaba was slapped of a $2.8 billion antitrust fine, which was one of the biggest in China's corporate history.
Chinese President Xi Jinping hosted more than a dozen of the country's top entrepreneurs, including the once-sidelined Alibaba founder Jack Ma.
Analysts are saying that this meeting signals a major course correction for the private sector because it has been for years now affected by a lot of regulatory restrictions.
It was really a striking scene when President Xi met the business leaders from the private sector. I do recall that journalists, experts were scrutinizing the photos and videos that came out of that meeting. Who was seated next to who? How long the handshake was. No doubt that this meeting at the Great Hall of the People was significant. But even before that, we had seen signs that the Chinese authorities were starting to once again shift their attitude towards the private sector again.
China has unveiled a massive stimulus package that will inject around 1 trillion yuan, or more than $140 billion of long-term liquidity into the financial market.
Analysts believe these measures came a little too late, but they say better late than never.
这些总量政策呢，将对稳增长能够发挥重要作用，所以大家都很关注。
我们要兼顾支持实体经济增长和银行业自身的健康性。要在这中间呢，要有一个比较好的平衡。
在924之后的话，中国的决策层对于整个的金融市，包括证券市场在内的金融市场如何去运行，有了一个新的一个思路，并不会再继续按照原有的这样的金融产业，它可能是跟实体经济之间的这种关联性这个较低。 然后更多的都是金融产业自己内部在进行循环，在实现这种增长。投资者或者说是金融行业的这种参与的这种各种主体来说的话，他们都是非常聪明的，他们能够看到政策这种变化以及这种方向上的这种调整带来的这种新的这种机遇。
Well, China's top 3 financial regulators came out and pledging more support to shore up China's stock market. In China, that's no small gesture, and even local media described it as unprecedented. What really caught people's attention is the timing of that press conference at 9 a.m. sharp, even before the stock market opened, which is pretty rare in China. And the message is pretty clear and loud. Beijing wants traders to see it, hear it, and trade on it.
From Shanghai to Sydney, it's been nothing short of a pounding for markets across the region. Chinese shares leading the way.
Well, what was already a bad week for China, shares getting a whole lot worse today.
Analysts saying that today's region-wide sell-off is really the China spillover effect.
I still remember the time we have actually foreseen a market crash because the market was too crazy. The market rose by about 150% in less than 1 year's time. We see a lot of investors are rushing in with borrowed money. So there was a lot of over-the-counter borrowing. There were a lot of companies trading at over 50 times P/E ratio. That was dangerous.
Back then in 2015, it was because of the margin lending activities, the unfettered market activities by many of the brokers and also OTC lending that caused the market into trouble. And the CSRC officials had to use force, put a hard stop on the lending activities, and that actually triggered a market collapse.
China's stock market has been in a long sideways drift since the 2015 crash and nearly a decade without a real or sustaining rebound. And in the early 2024, sentiment was scraping the floor and no one wanted to catch the falling knife. And then came the turning point. Since the PBOC-led policy push, we are seeing those officials are sending a clear signal that policymakers are stepping in.
Prior to September 2024, and the announcement of stimulus measures, China's stock market was still facing many challenges and perhaps still in a bit of a slump. But what really changed that narrative was the emergence of DeepSeek. So DeepSeek is a homegrown AI startup, and when it came onto the scene, it really caught people's attention because one, it claimed that its open AI language model was able to perform as well as what was already available on the market. But beyond that, it said that it was developed at a much lower cost. And that really rattled investors and sparked a stock sell-off for the likes of AI poster child NVIDIA. But beyond that, it's called a DeepSeek moment because of the far-reaching ripple effect that we've seen till this day, forcing a rethink of what the Chinese tech sector is capable of. It really flipped the narrative when observers and investors talk about the Chinese economy.
Competition in the global tech scene redefined.
The release of DeepSeek AI from a Chinese company should be a wake-up call.
It is a catalyst or a reminder that the Chinese economy, particularly the private sector, remains to be very innovative and dynamic.
We call Donald Trump 川建国, so Donald Trump helps to build the new China. The Trump government has been very harsh in technology transfer, also very harsh on Chinese manufacturing sector and many other sectors. China has no other way out but have to rely on itself. Because I travel extensively in mainland, can feel that the pace of innovation is really fast, and many things are turning around. And I think it's very difficult for people outside China to comprehend.
Well, the so-called tech revival has been the driver behind that market rally, but let's be honest, many of those tech companies are barely turning a profit. So their stock price rise are not based on financials or fundamentals. They are mainly driven by storytelling and hype. And people start to sweat again as they worry that the recent rally they are seeing could be a repeat of the 2015 bubble, and that nightmare still looms large.
It is a danger. People get too speculative for its own good, then yes, it could be another bubble forming. But I think right now at around 4,000 points, it is still way too early to be talking about a stock market bubble. For the authorities, it probably has learned plenty from the episode of 2015 bubble. Right? So this year, there has been sort of a measure way to guide the market, especially in terms of margin lending activities that broker was able to do. But I think right now, things are very, very different. The mantra is to have a slow rising bull market.
I don't think many people have faith in the next 5 years if China's growth is going to be maintained at 5% around. Without innovation, China cannot move up the value chain, cannot create higher value-added jobs, and therefore cannot have 1.4 billion people have a higher income per capita. There is no subsidy in the world can support consumption of people of that size. We have to earn it. If you're bullish on China's innovation, you should be bullish on China's consumption. And with that, you should be very bullish on China's exports, because we already started to see Chinese companies become leaders in global sectors like 宁德时代 cartel.
更早期，大家都取笑中国的 A 股市场，就是说美国的市场的话是科技企业，自媒体、社交媒体上面的话，就说中国的科技是什么呢？是酱香科技。因为中国 A 股市值最大的企业是茅台，贵州茅台是中国的品牌的这种白酒。近期的话，中国的新兴的做锂电池的宁德时代的话，在这个某一个时间点的话，它的市值已经超过了茅台。这个就说明中国整个 A 股市场的投资者的这种偏好，已经从这种传统的消费品更加稳妥的这样的这个标的，已经转向了具有这种科技属性的、这种具有国际竞争力的这种龙头企业。
The last sort of a tremendous bull market later on evolved into a bubble was in 2015. The tremendous bull market before 2015, it was in 2005. So there was 20 years since today. So it seems to me that the Chinese bull market is 10 years in the making. So let's hope that this time around, the Chinese market break out of its doldrum and then achieve another great bull run for investors.